Welcome to Financial Planning Explained. I'm your host, Mike Menninger, Certified Financial Planner, founder and owner of Menninger and Associates Financial Planning. I'm pleased to have as my guest today, Bryan Nestor. Bryan Nestor is the owner and founder of Nestor Insurance. Bryan, thank you for joining me.
Hey, thanks for having me, Mike.
So what we're going to be talking about today is employee medical benefits. Could be whether it be medical, it's benefits that you normally get from your employer. So it's usually medical insurance, it's life insurance, and disability insurance. Is that basically it?
Yeah, a few extras, but absolutely, that's right.
Well, what are the extras?
Well, you got long-term disability. You have accidents, critical care, a couple of extras, maybe some HRA and HSA planning.
Okay, perfect. Well, I consider HSA part of the medical insurance. So tell me about your agency and your business.
Absolutely. So I started the agency, the actual office in 2017, but been doing this since 2007. 17 years and counting, and we operate right now in PA, New Jersey, Delaware, and Florida.
Okay.
Group benefits for groups down to 2, but all the way up to 750 employees.
Wow, that's a big one. You got a 750 employee benefit plan?
I do.
Oh my God, that's probably tough to administer, isn't it?
It can be, but because of the technological advances in employee benefit administration, it actually is quite easy, and we actually do all the internal technology setups and administration internally, so we have control of that to make it much easier for us and the client.
Okay, so I remember basically there's only, in southeastern PA, there's only really 2 carriers, isn't it? Keystone or is Keystone's Blue Cross, right?
That is Blue Cross, yes it is.
And then there's Aetna?
Actually, there's 5 right now.
Oh, all right. Well, that's
all right. Yeah. There's 5, but still, there's only 5. There used to be a lot more, but there's only 5. So you have Aetna, Cigna, United Healthcare, Highmark, and then Independence Blue Cross.
Okay.
And Highmark's the new one because they just came into the market 2024. So that's a brand new for Southeast Pennsylvania.
So the one thing about Obamacare that I remember someone once telling me years ago is that the big thing that it did is it standardized everything. And when they did that, I compared, and this is before my employee benefits, and this is when I was self-employed, so to speak. Basically, the costs of the 2 plans were virtually off by $11 on 800. Is that still the case?
It can be. It depends on if we're talking about just normal, fully insured products. It is all based on age and smoking status for a lot of carriers. And some of the plans do look very similar, especially some of the popular ones. But if you don't search about all the current plans that are available now, because every year they do update everything, and plus there's a new segment of self-insurance plans through companies like Aetna and United Healthcare that may be a better fit.
Now, self-insurance plans, I think of that as IBM, like giant companies can self-insure. Is that what you mean by self-insured plans?
Actually, no. So they've built, let me correct that. Yes, but they've actually built products specifically for small companies to take away the big risk of being, quote unquote, really self-insured.
Right.
So there are essentially hybrid products that help smaller companies take advantage of self-insurance, but yet not being completely at risk for a large claim.
Right. Okay. They're basically reinsuring. So that's an interesting idea. I never knew that existed for medical insurance. So what differentiates the 5 different companies that you have access to?
Most of it is just product offerings. For instance, independent of the segment of employers that we're referring to. In our business, companies that have 2 to 50 employees generally have 2 or 3 options when it comes to what to offer. And that's just types of products. But when you get to 50 employees or 100 employees enrolled, there are other options and just a little more, say, beefier plan that you can essentially pay for or customize.
So if I was call it 100 employee company, could I offer a product from Aetna and a product from Blue Cross? Or is it typically only one company and they may have a few different products?
So typically for medical insurance, you'll choose one. Even if that's size of company, you'll offer one product. But you may offer multiple dental plans from different dental carriers, depending on the network or depending on where your employees are sited. So that would be a better example for when you use multiple carriers.
So one of the things that by the way, I hate medical insurance. But anyway.
Me too, it's okay.
So one of the things that I have found is that, and now they have the gold, the silver, and the platinum and all these different things, is what might work for me may not be what you want, which may be different than the next guy. So whether I want a better prescription drug plan or I go to 10 different doctors every other week. That basically is offered within yours, and those are the different products, right?
They can be. You'll have really the basics of each type of coverage, like for instance, prescription drugs or seeing a primary care physician and specialist in every single plan. But offering multiple plans within the same carrier at the same time is really something that we talk about with the clients and make sure that they do, because you're right, there are different employees that have different needs, and what I feel is the more important side of it as an employer is knowing what the contribution strategy towards the employee's premium versus actually what the plans are you're offering.
Really?
Yes.
So that comes into play big, huh? Why?
Yes, it does. Well, as an employer, you're really trying to make sure your costs are actually acceptable for offering employee benefits. Each employee costs so much money, and especially if you're talking about age-based products. There are ways to have better strategies to help make sure that you have a consistent cost over the time of actually offering these employee benefits. As an example, you can offer a flat dollar amount versus a percentage. That way the actual cost of offering an onboarding employee is the same for every employee that comes on board.
Which is great for the young guys, not as great for the old guys.
That can happen, that's correct.
Or as a percentage.
That's correct, absolutely.
I remember back in the day they had cafeteria plans where they gave you, if that was the right word, they gave you, hey, here's $700 a month, shop as you feel fit. If you spend $500, you get $200 in your paycheck. If I spend $1,000, then I owe $300. Do you see that a lot, or is that?
We don't see that a lot anymore. A lot of times we'll see other things like a health reimbursement account set up for an employee to help mitigate some of the co-pays, co-insurances, deductibles for different plans. And we see that more often.
Is that like an FSA?
That's a type of one. There's an FSA and there's HRA. The HRA is more the employer side, giving benefits, where the FSA, the employee is actually telling how much they want to deduct for the year and use for that year.
Right. Okay. And I know FSAs are use it or lose it.
Yep.
Are the HRAs also, or it's just a reimbursement, right?
It's just reimbursement. It's a different type of product. Yep.
Okay.
Or program,
Okay.
I should say.
So one of the things, HSAs, you offer HSAs. Okay. Can you explain what an HSA is for the viewer who may not know what it is?
Absolutely. So an HSA stands for Health Savings Account. What that is that it's a type of banking account that you're allowed to essentially open and fund as long as you have a health savings account or HSA compatible health plan. But you must have one, which usually means a high deductible.
Right.
And you got to have that to actually open the bank account. And sometimes the carriers will just offer a service, or you can open your own private one.
My understanding is that, well, first of all, HSAs are the coolest thing in the world simply because it's the only account that gives you the ability to contribute to it, tax deductible, and it grows and withdrawn tax-free, obviously, if used for qualified medical purposes, and you can invest it, and you can accumulate all the receipts for the medical expenses, pay for them out of pocket, and at some point in time later, reimburse yourself with all that tax-free money.
Essentially, that's correct.
That's a cool thing.
It is a cool thing.
So, on the HSA, let me rephrase. On a high deductible plan, I inquired about that for our company's plan. And one of the things that I found, I was expecting that the premiums would be significantly lower.
Yep.
And my expectations were not met.
I am not surprised by that, and that's really due to the way new health plans are essentially offered due to the ACA passing. So one of the things is that it's a very common mistake right now, especially the age-based product. That big savings doesn't really exist. Now, if you're a larger employer, 50 employees, 100 employees, or if you're looking into self-insurance plans, the ones that we talked about, those may actually be more significant savings if trying to offer an HSA account. It might be a better option for that.
Yeah, so I mean, I don't remember what the numbers were, and let's just say it was $900 for me, because I'm an old guy. And to go with a high deductible plan, it was like $850.
Yeah.
I was so surprised by that. I mean, I suppose what it could do for me is it could allow me to make the contributions to the HSA, which would be advantageous for me. But
assuming you don't use it, because that's the biggest issue. This premium savings a lot of times in your situation or situations like this may not be significant enough to actually take that risk.
Right, but then all of a sudden I have a medical event and now it costs me $6,000 or
Right,
$7,000 out of pocket, and that kind of defeated the purpose.
Gone. Exactly.
Right, done. Right, exactly. In other words, maybe not the greatest of all things, and that's probably why I didn't do it when I evaluated it. And then that was a couple of years ago, but it just didn't seem to make sense.
Oh, and that's why I would say to you, that's why you might want to look at a self-insurance plan through one of the carriers that offer that, and that might be a better solution for that.
Interesting. Interesting. Well, I guess it would matter a lot based on the census of your employees.
It does, absolutely.
And so most of my employees are younger. What type of plan seems to make sense for that type of group?
Well, there's some other factors, but I would say that, again, you're wanting to at least explore the HSA. I would actually tell you that that would be probably a good start, and then maybe offer a buy-up option, or maybe 3 options.
What's a buy-up option? What does that mean?
That would be, you would offer a base plan as an employer that you would contribute to, and then you would offer a second plan that would be a little bit better benefits, or I say better, but a little more robust benefits in the plan. A silver or gold, a little bit higher, metallic, and we'll use that as an example. And then you would let the employee, if they want to up into the next plan, you allow them to have a payroll deduction to get the better plan.
Interesting. Interesting. May need to reevaluate that.
Maybe.
So how does the pricing work on the plans? Like, for instance, a company comes to you and says, hey, Bryan, I would like to establish a medical insurance plan. Walk me through the process of somebody coming to see you.
Sure, absolutely. So when we start the initial process, if they want to get to the actual quoting side of it, we do need a full census that includes the names, the date of births, and then we take the information and we get essentially illustrative quotes for all the carriers that are available for that area.
So you need basically 3 data points. You need date of birth, gender, tobacco status, correct?
And zip code. Zip code is important.
All right, that's interesting. Why?
Well, zip code is important because let's say you're an employer, say in Pennsylvania, but you have employees that are in North Jersey. You need a PPO option to at least be available to the employees in Jersey because they won't be able to use a plan as, say, an HMO in our area.
Okay, interesting. Did not know that. So what do you do in that case? So you're almost creating 2 plans within the plan.
Correct. Well, most carriers allow you to offer 3 plans. So you could essentially either in this situation, if that was the example, you could just offer PPOs and that would solve the problem for everybody. Because there are PPOs that are around the same cost as a lot of HMOs in different silver, gold, metallic levels, and you can just mitigate that issue that way.
So what do the companies do who are national companies? Again, I'll use the IBM, and for no particular reasons. My father retired from IBM, so I think about that. And so what do you do? What do the national companies do in those situations? Like an Aetna or something. Well, the Highmark, you use that one. I'm not familiar with them. Are they a local type of company?
They're part of the Blues family. Actually, it was really interesting. I found out over the last few years is that the whole Blue Cross companies. There's Blue Cross and there's Blue Shield. They're both essentially individual franchisees.
Oh, really? I thought it was Blue Cross Blue Shield.
That is correct. No, that's not totally correct. It's Blue Shield and Blue Cross are technically separate entities themselves and different franchises. And really, Independence Blue Cross has a Blue Cross license, and then Highmark activated the Blue Shield license in the 5-county Philadelphia area.
Interesting.
Yep.
Interesting.
Yeah.
So the odds are then, going back to it, if this was a national company, you're going to have to get a company like an Aetna or U.S. Healthcare or whomever who covers the whole country, right?
Not essentially. You could still use the Blues because they have essentially built a whole network of PPOs that allows each individual Blue Cross franchisee to use the Blue Cross network across nationally. So you can use all of them. So
in the case, let's say you landed IBM.
Oh, man. Come on now, that'd be a dream.
How do you administer that, or do you pass a lot of the administration back to the company?
No, so this is where I think is part of the differentiation, and where I think a lot of times companies have to value what resources they have, what resources we have. And I see we had a company that large, there would definitely be a combination because there's a lot of employees. I mean, if you're talking to an employer that had, again, I know IBM is obviously more than 10,000 employees, but let's just use it as a rough number. It's a whole service team that has to help essentially do all that. Now, again, technology has changed everything. A lot of the idea of helping a group of that size is just make sure that technology is helping to capture the enrollment, make sure the enrollments are integrated with the insurance carriers, and make sure the payroll deductions actually get to the payroll company. Once you evaluate and take those things together, it actually makes it very simple.
It's an HR function. So, what do you guys do compared to, I'm thinking of the IBMs of this world compared to the smaller company like myself. What role do you play versus me picking up the phone and calling the insurance company themselves? Like, why would I call you? When do I call you?
No, it's a great question. So I would say at any time you're wanting to do employee benefits, you want to call myself a broker.
Right, of course.
And the reason is that there's no discounts when going direct to the insurance company, especially for medical insurance.
Right.
There's no discounts. So there's no incentive for you to do so.
Right.
Number two, we become your first line of service for actual issues to the insurance company, whether it's yourself as the employer or for the employee. And I think that's a big differentiation is that we'll actually help employees through all that. We have special phone numbers with all the insurance companies to help them mitigate any issues they have. And it can be as simple as just getting an ID card because they lost it or what have you.
Right.
Or it could be as significant as we have a large claim that we're not sure is processed correctly. We'll handle all that and help make sure that the employee doesn't feel that stress of having to deal with things.
Right.
And that helps the employer not have an employee who's constantly worried about something throughout the day.
Sure. No, it's a pain in the butt, too. I hate dealing with the medical insurance.
That's right.
Well, the other thing, too, is I would much rather call you on certain issues, and I'm going to bother you, but call you on certain issues because it's annoying being placed on hold and doing the old voicemail push 3 and
I would ask you, Mike, why would you want to waste your time?
I don't want to, trust me.
And that's, you know what, instead of having an 800 number, you call us locally, and that is really the biggest differentiation. Most of our brokers in our area, and let's say the last 5 years, have been absorbed by larger brokers.
Right.
So you're going to an 800 number eventually with those brokers too, because they'll lose control of the whole situation. I've been doing this 17 years. I have a lot of years left. I have one to believe, and we're going to keep going after it. So I want to make sure that that's how we do business and we take care of people.
Well, good. How many employees do you have working for you?
5 people. Yep.
5? Okay. And I would imagine most of them are handling the servicing and dealing with the calls like me calling.
Absolutely. We have that, and we have full service email box. So we have 3 people looking at all times. So if there's ever a service issue that's on can email only because they're working, do what have you, we have that available as well.
So open enrollment's coming up soon, ain't it?
For a lot of companies, it is.
So when is open enrollment? It's normally, I always think of open enrollment as being October, November, right?
No, it's okay. So open enrollment, depending on the company, because you determine your own plan year for your open enrollment. A lot of companies do offer benefits to start on the first of the year, so there will be plenty of open enrollments for starting November, October, November, and December.
Yeah, okay, and that's what I think of almost every company that I've ever worked for, which isn't a lot. Or, let me rephrase that. I'm saying,
how many companies has it been, Mike?
All 2 of them. All 2 of them. All 2 of them. And by the way, they're all in like the 90s. So,
okay. All right.
Anyway, but I know that we work with clients who have open enrollment.
Yes.
And so, and I've never come across one other than the calendar year.
Okay.
As having a fiscal year something other than the calendar year.
It's a very common open enrollment time frame. And honestly, besides the open enrollment for group benefits, you have individual enrollment and benefits for individual medical plans, open enrollment coming up, as well as individual Medicare open enrollments coming up as well.
Oh.
All in the same time frame.
Yeah, right.
All of them.
I don't know. Isn't that nice?
It's perfect. It's planned perfect.
It reminds me of the accountants who have to deal with March 15th and April 15th. Mm-hmm. You get hammered with everything all at once. And I will have you know, I don't envy you guys.
I feel the same way for you in the March and April time.
So I don't deal with that.
That's right.
Let's take a break, and we'll talk about the other facets of the insurance products and stuff that you offer.
Sounds great.
All right, cool.
Yeah, awesome.
Do you keep up regularly with your investments? Where exactly are your hard-earned dollars going? Are you financially prepared for an emergency?
I'm Mike Meninger, founder of Meninger and Associates Financial Planning. We believe that education and knowledge are powerful, and we want our clients to understand why we are making the recommendations that we make. It's your money, and you deserve to know where it's going, because it's not how much you make, it's how much you keep. So call us today to discuss your financial concerns. Welcome back to Financial Planning Explained, and I'm here still with Brian Nestor, who owns and operates Nestor Insurance. And we're dealing with medical benefits and spoke almost all about the medical side. What I'd like to do is talk about, for the remainder of this episode, is some of the other benefits that are provided, specifically disability and life insurance. And you said there are others. I mean, I suppose there's long-term care, and I don't dig into that as deep, although I probably should, but we may not have a lot of time.
Sure.
So tell me a little bit about, do most companies that offer medical benefits also offer life and disability?
You know, I'm actually surprised, even today, not many, so depending on the size of the company, offer it all the time, and they should. And in some way, capacity should offer it to the employees.
Aren't there restrictions, even if I were to say, hey, you know what, I want everybody to pay for it, I'm not paying for disability, are there restrictions? I think a certain percentage of the employees have to take it?
There are, and actually, I would say one of the biggest challenges for smaller employees is to offer these plans for that reason. But I tell you, for our standpoint, if there are 3 employees or more that want disability, we can help get it installed.
All right, perfect. So we encourage our clients, do not underestimate the need for disability insurance. All insurances operate the same way. They protect you in the event of a major financial disaster. And the more likely something is going to happen, the more you have to pay for it. But long-term disability is so important because the ability to bring home a paycheck is so critical and so easily overlooked, because you know why? It'll never happen to me.
Correct.
Okay? And it happens more than, you know. So one of the other things that we recommend is that clients pay after tax for their benefit. Mm-hmm. Is that simple to do from your end?
Absolutely, and it's really a smart way to do it. Obviously, because I mean, it just avoids taxes when they're actually collecting benefit if they were to ever need the disability benefit. So it's perfect.
So was there a recent law change that made it so that, let's say you're my employer and you're paying for my disability insurance, and a lot of times they'll say, 60% long-term, I could buy up to 70 if I wanted. Mm-hmm. But to take the premiums that you're paying and have that be imputed income so that I pay tax on it, so that if I'm disabled, then the entire benefit is tax-free?
Correct, but you have to really pay attention to each state. Law is a little bit different on that.
Okay.
Each state offers a little bit different, really different plans. So you do really pay attention to that. But in certain situations, that can be the case.
We'll talk about Pennsylvania, since that's where I hang my hat.
That's perfect.
Do they allow it? Pennsylvania allows it?
With imputed income, yes, they do allow it.
So if I have a client who has disability through work and they can't buy up, what do they have to do to get the employer to impute their income? Is that something that they have to offer to everybody, or can each individual go to their employer and ask?
So with most group benefits and anything that's going to help one employee in general is never advisable. You want to make it an offering to all employees that qualify for something like that.
And that's something that they probably deal with through payroll as well.
They will be a part of their payroll. That's correct.
I tell you what, that's something that I am going to recommend to you as a financial planner, that every company that you deal with, you should talk to their owners and say, hey, look, it's no skin off your back. Mm-hmm. You should allow the employee to impute the income, because trust me when I tell you, as an advisor, as a financial planner, every opportunity that we can get the client to pay the taxes on it now, because disability is not that expensive through the plan.
Yep.
And if I can walk away, if I'm already, and we all have these discussions, if all of a sudden I'm receiving only 60% of my income,
yep,
man, and I have to pay tax on it too?
Tough.
I'd love the ability to have it be tax-free, and the amount that it really costs me what, 20, 30 bucks a month?
Yeah,
Maybe?
Maybe, depending on the
So-
plan. Yeah.
So, all right, that's an interesting question. So, I'm now going to have my clients approach their HR to find out if they can do it, because it wouldn't surprise me if they can. We just never asked.
That is probably the case.
All right, how common is that companies allow it? Is it more common that they do, or more common that they don't?
When we talk about it with employers, most of them are surprised it's even available.
Okay.
So it's just, I think it's an opportunity. If you're in the situation, you definitely have the conversation and just see if that's available for them and make sure it gets done.
How recent was that? Was that a recent tax law change, or has that been in place for a while?
I want to say that was more recent, but
I think so too, because I didn't know that was available. I'm wondering if that was part of the whole Secure 2.0.
it might be actually.
Buried under there, which was only a few years ago.
Mm-hmm.
So, and like a lot of things, a lot of benefits, like the Roth IRA, the Roth 401k, might have been instituted a whole bunch of years ago, but until they made it final, not that many years ago, a lot of plans didn't have it. And then having the ability to convert inside the 401k, it should be available. It's just employers don't know about it.
Yeah.
And employers don't know about it because the people don't, like yourself, and I'm not,
That's fun, yeah.
so.
There's just, listen, employee benefits and, financial planning, everything's been changing over the last 10 years dramatically.
Yeah.
And I think that's one of the biggest challenges that, as an employer, your job is not to manage employee benefits or 401ks, it's to run a business.
Correct.
This is just one of those moments where you just may not know what's available to you, and sometimes you have to go through and kind of reevaluate.
Yeah, well, that's something that I was not aware of, and may, through my clients, get them to tug on the folks at their HR to see if it's something they can implement. Now, let me ask you this. If they implemented it, does it have to be implemented from the corporate side? Does it have to be implemented at open enrollment, or can they make that change at any time?
So that's going to depend on a couple of factors, but if all the paperwork's done correctly, I believe you will be able to do that throughout the year, but you have to establish some new plan years for short plan years to get that done. So
You have to do what?
I think we have established some plan years, but make sure the plan years fixed for that, but I think that is something you can do during the year.
Okay.
I would double check that, obviously, but I believe you can still do that throughout the year for that.
So in other words, the corporation can, in April, even if they have a calendar year, in April can say, hey, we're going to change our plan to allow those folks who have disability want to take it as imputed income. They could. You're saying a company could do that
I
mid-year?
believe so. I mean,
Okay.
but again, I'll double check that for myself, even to make sure of that. But I know when we implement it, usually it's during their open enrollment time frame. So
Well, because that's when you're talking
that's
about it.
when we're talking about
Of
it.
course. We're wrapping up the episode. Is there anything else that you want to share about employee benefit plans that we didn't talk about?
No, I one of the things I will say, actually, in the event that you're finding yourself not knowing where your benefits are right now, I would tell you that employee benefits are, again, we talk about it, it's changing. Just talk to your broker, talk to us, see if we can help you out, because, again, it's a tough deal, and we want to help make sure your life's easier. So.
No, I appreciate it. And one thing that I really liked about you when I met you not that long ago is you operate the way we like to operate, and truly as consultants. You serve as a consultant. You're providing good information to your client for them to be able to make informed decisions. Now, it may take a little bit of prodding and pushing direct, because they're going to ask you, okay, great, what do you recommend? But I do like how you do business and how you operate. So if you could, we're going to wrap up the episode, take 20 or 30 seconds, look into the camera, and just tell people how they can reach out to you, because we are approaching open enrollment season. There may be companies out there who are looking to change, and take a second.
Oh, I appreciate it. So if you'd like to reach us, you could call us at 484-390-5312, or you can email me directly at bnester@nesterinsurance.com.
That's Nestor, N-E-S-T-E-R, B Nestor. So
Thank you.
nice and easy. Well, it's like it sounds, but it could be O-R. or
I've
whatever the
seen
case
all of
may be.
them. I see them all come through. I can't get a hold of you, Brian. So I did it.
Trust me, I have so many people. I just had this the other day. He's like, oh, yeah, we got a guy named manager at your firm. I said, I'll bet you don't.
Yeah, that's
And
right.
I said, is it spelled the same way? They go, no, M-I. I'm like, there you go. See, I told you.
Love it.
But anyway, Brian,
Hey,
thank you
pleasure.
very much. I learned a few things myself.
Wonderful.
And I hope you as the viewer, again, the focus of our show is to provide an educational experience, hopefully a little entertaining, but to provide an educational experience. We're approaching open enrollment season, and if there's something that came up here, please feel free to call Bryan, talk to your HR folks, whatever it takes. So thank you again for joining, and I look forward to seeing you in the next episode of Financial Planning Explained.